Gold gapped lower as the US struck Iran, and for 2 hours, sellers were fully in control. Then something happened that a lot of traders missed. Buyers didn't just stop the bleeding. They took the market almost all the way back to where it started. That kind of reaction after a real geopolitical shock tells you something important. Let's break down exactly what it's telling us, and where this goes next. First, the reason behind the reason. This wasn't a Fed story. Trump called the Iran ceasefire over. The US struck Iranian targets. Iran hit back at American sites in the Gulf. Oil spiked, and gold sold off almost 2% in 2 hours, bottoming right around 4,020. But here's the tell. The dollar index topped out at almost exactly the same moment gold bottomed, 101.29. And it's been fading ever since, grinding lower, session after session. Right now it's sitting around 100.95, well off that high. As long as the dollar stays below that ceiling, gold has room to keep recovering. That's confirmation number one, and it's the reason I'm not fighting this bounce. Here's how I'm trading it. Opportunity number one. If price dips back into the 4,100 to 4,110 zone, that's a buy. Stop below 4,090. First target is the previous day's high cluster, around 4,145, roughly 2.5 to 1 on reward. Opportunity number two, for anyone thinking further out. If gold actually closes above 4,145, that opens the door to 4,180, even 4,200. That's the next real ceiling, and it lines up with resistance from earlier this month. Now, I want to flag something, because I'd rather be honest than hype this up. We're still trading well below the 200-day moving average, up around 4,330. The bigger trend has not turned bullish. This is still technically a correction. What we're looking at is a strong bounce inside a downtrend, not a confirmed reversal. Don't confuse the two. Which brings me to opportunity number three, and this one's about protecting yourself, not making money. If price dips below 4,095 and comes right back up within a candle or two, that's not a trend change. That's a stop hunt. A liquidity sweep clearing out the weak hands before continuing higher. Don't panic sell into that. But if gold actually closes below 4,020, that's the real line. That's yesterday's crash low. A confirmed close below that level flips this entire recovery story and opens the door back down toward 3,950, maybe lower. So here's the whole picture in one breath. The dollar is fading from its high, and that's supporting gold. Buy the dip toward 4,100. Target 4,145, then 4,200 if it keeps running. Stay balanced. We're still under the 200-day average, so this is a bounce until proven otherwise. And the one level that changes everything is 4,020. Hold above it, I'm bullish short term. Lose it for real, and I'm stepping aside completely. Let me know in the comments, are you buying this dip? Or do you think the dollar is about to turn back up and cap this rally? See you in the next one.